Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Melker, crypto trader and investor, with host of the Wolf of All Streets podcast. He's also the author of the Wolf Den newsletter. We're going to discuss President Biden's executive order on digital assets, inflation, and of course, global central bank policy and Russia-Ukraine. And Scott, so much has changed in the world since we last met on February 10th. Most recently, President Biden's executive order on digital assets, I thought that was a really positive development and the way that they're interpreting this.
Absolutely. I think that, markets hate uncertainty, and now we have a bit more clarity that there's going to be no aggressive language or anything overtly negative from the United States government moving forward. As you said, we've actually been expecting this executive order since December, but it's continually been pushed back. And then the war, of course, which makes sense, delayed it by a few more weeks. But it looks like Biden is reaching out to regulators saying, you really need to get it together. You need to send me a report. We need to understand who's going to be looking at different aspects of this space so that we can allow for innovation, but also make sure that consumers are protected. I think this was the exact language that everyone was looking for in the United States and expecting.
Right. And I also think from a global perspective, it suggests that digital assets are something that are here to stay. It's not a short-term phenomenon like meme stocks were in 2021, but this is something that is a legit asset class and is in fact being used to transact business.
I think that that's absolutely true. It's way too far gone for us to pretend that Bitcoin's going to zero or that any major government is going to be effectively banned outside, of course, of what we saw last year in China. I think the goal, obviously, is to regulate it, make sure the consumers are protected, make sure that they get their taxes, of course, because that's what they ideally want. And to make sure, I think now for the United States, that innovation remains onshore. I think that there was a lot of expectation the companies were just going to start operating outside the United States and pretend it didn't even exist and just go about their business and not allow Americans to participate. And so I think we're having at least some hope that that's not going to be the case.
And with Russia-Ukraine, how is that impacting the crypto space?
I mean, listen, first of all, it's hard to even talk about what's happening in financial markets when you see what's actually happening on the ground in Ukraine. It's incredibly sad and a really horrific occurrence. But I think that what we're seeing with crypto donations in Ukraine and how we're seeing people in those countries, transact using crypto when they're blocked from everything else is really shining a bright light on the positive use cases of Bitcoin and cryptocurrencies. And I think it's very glaring and very hard now to take for more of a negative stance when you see how much good it's doing for the actual people on the ground and how quickly it's doing it. I mean, I believe it's almost $60 million now have been donated directly in crypto to the Ukrainian people. That's absolutely astounding. More than governments, more than, the United Nations have been able to get through. It's really, really incredible to watch.
Right. And back to our point about, longer term views on digital assets. I also think when we think about charity overall from a global perspective, not only does the technology behind what we are learning with crypto and digital assets, it helps provide that transparency, that level of encryption and safety. And I also think it's a great way for Gen Z and future generations to be actively engaged with charitable work because it's something that they understand and feel comfortable using. So at a much higher level, perhaps that's a silver lining that we can get out of this conflict to see the practical applications, how this type of technology can be used. So there certainly is hope there. Another thing I wanted to ask you is we saw the inflation number, which was not too much of a surprise. We knew it was going to be pretty ugly, one of the uglier ones that we've seen in over 40 years, right? And then we have to think about how that's impacting global central bank policy. It's interesting, Scott, we always, in the beginning, we thought of Bitcoin and other crypto as an inflation hedge, but it's interesting to see just how correlated cryptos are trading with the overall market.
Yeah, I think that it wavers. At certain times, it seems to trade like gold. And then obviously when things go aggressively risk off and stocks start to dump, I think we see Bitcoin moving with them as well. But even just 2 days ago, we saw Bitcoin go up when the markets didn't really react in the same way. Just yesterday and today, Bitcoin has gone down while markets have been somewhat flat. So there's these sort of temporary correlations. But I do think it makes sense. Bitcoin trades 24/7, right? And if you're in a risk-off environment and it's a Saturday, for example, and you're looking for something to sell because you're scared about what might happen in the market on Monday, you can't sell your stocks. You have to wait until Monday to panic, right? And so you have the option to sell your Bitcoin or these other assets, and things that are more liquid and are 24/7 are naturally going to be the item you look to first to get liquid.
Right. Well, and speaking of liquidity, do you also think it's a function of, let's say, even newer retail investors or institutions for that matter, that are perhaps taking a step on the sidelines to kind of see how this plays out? Because we're also seeing it in just about every other asset class. The liquidity has certainly shrunk, and the velocity of the moves makes it really hard, to your point, stomach over a prolonged period of time.
Yeah, I mean, we're used to the volatility, obviously, in crypto, but your average person who may have bought Bitcoin to 55,000 or 60,000 and isn't comfortable is probably at some point getting impatient and selling into the lows. And that's what you see if you look at the on-chain analytics. Whales and the early holders and the big wallets, they're accumulating, while the shorter term wallets and the small holders are selling their coins directly into them. That's what you see in every market all the time. As you touched on, weak hands selling into strong hands. And unfortunately, eventually those retail will probably end up buying much higher.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.